I have a story for you from an interaction I had with a client. So it's a young lady who called me about 2 weeks ago or so about renting an apartment with her brother because they wanted to move out of their mom's house. I'm usually gonna ask or suggest that you buy a home, right? One of the first questions I ask is, have you thought about buying a home? Because paying $2,500 in rent is almost like you're paying a mortgage. What's going on, guys? Mike here again, and today I'm gonna talk about some of the things that are keeping you broke. Initially, I started qualifying the brother and the sister for an apartment, and then we went on to do a mortgage application with her and her mom. We finally found a couple of apartments that we wanted to look at. Oh yeah, this is important to the story. The sister's credit is great, right? The girl's credit is great. She's got a 740 credit score or something like that. The brother's credit is really bad. It's like a sub 550 credit score. I think his score was like a 530 or something like that. And this is significant because renting a home, it's almost like you're purchasing a home. They're gonna wanna see your credit score, they're gonna wanna see your income, they're gonna wanna see your background. You're gonna go through jumping through the same hoops. So we go to look at one of these apartments that they like, and the mom is the first one to get there. I'm there for about 20 minutes, they haven't showed up. The brother gets there. He pulled into the apartment complex and was asking me where I was, and I was like, I'm right by, X building. And he's like, you don't see me? I'm in the BMW. And the way he said it, it was the funniest thing. Anyways, this is gonna be important to the story later on. So he pulls up, guy looks like he's going to a fashion show, right? He's got all the name brand hat with the watch, with the iPhone, with the shirt, with the big logo on his belt, and you name it. The brother didn't qualify. He had the lowest income, he had the lowest credit, and funny, right? Lowest credit, lowest income, yet he's driving the most expensive car, right? He's driving a 5 Series BMW. So as we're looking at these apartments, I'm trying to remind them of the fact that, guys, it's way more of a better option for you guys to try and purchase a house. You're already pre-qualified, we could start looking. And the brother jumps in and says the opposite of everything I'm telling them, right? He's telling them why buying a house is not a good idea because if you don't make the payments, they're gonna come get the house from you. His sister is too young, she's 21 years old and she shouldn't buy. I mean, just spewing a level of ignorance that is just...
What the f*** are you talking about, man?
Everything about what he was saying was wrong. So I politely said to him, hey, no offense, but I think I might have a little bit more experience in this area than you do. To which he responded, well, you might know real estate, but I know business and sales. So you see where this is going, right? 22-year-old kid talking his mother and sister out of probably one of the best financial decisions they would make for their future, which is purchasing a home.
Message!
And as he's saying all this, I mean, he barely lifted his head from his iPhone, from texting, and just kind of looking up. And I'm thinking to myself, everything about what he was doing reminded me of this video I watched a few weeks ago. Here, I'm gonna play a clip from it and you can see what I'm talking about.
Mainstream luxury fashion brands have trained us to believe that branding is everything, when in reality, most high-end products are really only status symbols for those that can't afford it. When most people think of luxury items, they're often reminded of brands that have strong advertising and a recognizable logo or design. Whether that be a Rolex watch, a Lamborghini sports car, or Gucci flip-flops, they're all easily identifiable as luxurious. While billions of advertising dollars have been spent to ingrain that message into your mind, often they aren't the pinnacle of quality by any means. They are simply highly regarded as a status symbol. Like many other animals on Earth, we place value on status symbols as they can project value upon ourselves. The more extreme income inequality becomes, the more pressure people feel to create the impression that they are succeeding. When the COVID pandemic shut down nearly everything, it caused many middle-class folks to lose their jobs and place significant financial strain on the entire world. You'd think luxury spending would crash during a time of global financial uncertainty, yet the exact opposite happened. Moet Hennessy Louis Vuitton, LVMH for short, is a French conglomerate that owns many brands such as Tiffany and Dior. Oddly enough, the last few years has been an incredible growth period for LVMH. Its market cap at one point crossed over $500 billion, and Bernard Arnault, CEO of LVMH, became the richest person alive with a net worth over $200 billion. There's not a singular reason why this happened, but experts point to a few key findings that help tell the story. For one, studies continue to prove that income inequality causes both the rich to consume more luxury goods as they can afford to, but also that poorer individuals similarly consume more as a means to present themselves as successful. When you see your neighbor or coworker wearing a new designer outfit, you immediately begin to wonder about how they were able to afford it. Turns out, a lot of the time, they can't. Despite what we think, that common luxury items are only purchased by the rich, it's actually the lower and middle class consumers that account for nearly half of the luxury goods market globally. There isn't anything inherently wrong with saving up to purchase a luxury item. Often, people do it as a gift to themselves to celebrate an achievement. The problem arises when these are used as a tool to project status, especially during times of economic hardship. While owning a home has become out of reach for many in the middle class, luxury consumption for the same demographic continues to go up.
Don't forget to like, share, and subscribe. Share it with someone you think might find it useful. You know, we can debate about all the external factors that play a part in, why it's harder now for people to own homes and income inequality and inflation and all the rest of it. But let's be honest, guys, a lot of it is self-inflicted. Right? A lot of it is self-inflicted. And if we have more discipline in going after these goals, these worthwhile goals, not the least of which is owning real estate and owning property, it would have a major impact on our lives and the lives of our family. There's another movie, I'm giving you guys a bunch of clips today. There's another movie called 99 Homes, starring Michael Shannon, really good actor. And there's a scene from this movie. I'm just gonna go ahead and play it. Take a look at this scene.
Up until 3 years ago, I was a regular old real estate agent. Putting people in homes, speculating on property, that was my job. Now in 2006, Robert and Julia Tanner borrowed $30,000 to put an enclosed patio on their home that they had somehow managed to live without for 25 years. Why don't you ask them about that when they're spitting in your face while you walk them to the curb? Why don't you ask the bank what the hell they were thinking giving these people an adjustable rate mortgage? And then you can go to the government and ask them why they lifted every regulation and sat there like a retarded stepchild. You, Tanner, banks, Washington, every other homeowner and investor from here to China turned my life into evictions. I'm not an aristocrat. I wasn't born into this. My daddy was a roofer, okay? I grew up on construction sites watching him bust his ass until he fell off of a townhouse one day. A lifetime of insurance payments, and they dropped him before he could buy a wheelchair, but only after they got him hooked on painkillers. Now, do you think I'm gonna let that happen to me? Do you think America 2010 gives a flying rat's ass about Carver or Nash? America doesn't bail out the losers. America was built by bailing out winners, by rigging a nation of the winners, for the winners, by the winners. You go to church, Nash? You go to church?
Sure.
Only 1 in 100 is gonna get on that ark, son. And every other poor soul's gonna drown. I'm not gonna drown.
That particular argument in that scene, he's not wrong. It's a really powerful argument about why you should try to get a seat at the table. So besides buying the superfluous luxury brands and making the frivolous purchases of handbags and all these other goods that you really don't need and, siphoning money away from saving for a home, what's the other thing that keeps people broke? Not investing in real estate, right? Renting all your life instead of purchasing. Like I always say, buy what you can until you can buy what you want. Thanks for watching, guys. I'll see you on the next one. Do me a favor, if you like this video, check out this next one. I think you'll enjoy it.